when I purchase, this person is giving me the goods. These are all the goods which I'm getting from him, and to have that products with me, I will have to pay him the cash. That is, I have to pay him the money. Okay. So every time, everything you do, just imagine now, you as a student, just imagine doing all the things. For example, you go to the grocery market, you go to the shop, when you buy anything, the pulses or the wheat flour, anything you buy, the fruits, vegetables, just imagine, obviously you give the money to them and you take the products you want. Apart from that, when you have to buy the books or the pens or pencil stationery, you will go to the shop, you will have to pay the amount, and you will get that the product to yourself. Is that clear? So every transaction involves two aspects. So one, we are getting it, one, we are giving out. Hello guys, I hope all the previous concepts are very much clear to you. Now today we will be studying in this video the next concept, that is the dual aspect concept. Now what is the meaning of dual aspect concept? What is the meaning of duality? Please just check it out. Now, as we all know, in accounting, we are simply here to record all the transactions into our books of accounts. We have to record all the transactions. Now the question arises, which type of transactions? As we have already discussed, we have to record only the monetary transactions. All and only the monetary transactions are recorded in the books of accounts. Now, every transaction has two things. Now, what are those two things? The first one is to give something in order to have something, that is, in order to take something, you have to give something. For example, if I go to a shopkeeper and I want to buy a chocolate for ₹50, so what's happening there? I will give, what I will give, I will give 50 rupees to the shopkeeper, and I will take a chocolate of the value, same value, that is 50 rupees. Is that clear? So these are the two things, these are the two aspects which are dealt in the transaction. So every transaction will involve two aspects. One, something is coming to us, that is we are taking something, and other one is something we are giving something. Is that clear? Now in this example, we gave 50 rupees. We gave 50 rupees to the shopkeeper and we received a chocolate worth of ₹50. Is that clear? So this is only the meaning of the dual aspect concept, which simply says this is the foundation, basic principle of accounting. Obviously, every transaction has to have the give and take facility. Apart from that, recording of business transactions, that is in the books of accounts, we record the transactions. So transaction always have two things in it. Next, dual transaction, which simply means twofold effect and recorded at two places. Now, I will record this in two places, that I paid 50 rupees and I got a chocolate of 50. Okay. So one, I am giving ₹50. One, I am getting a product of ₹50. So product is coming in and the cash is going out. This implies to each and every, every transaction. For example, I am the owner of a business. Obviously, I will have many of the employees working under me. So all the employees, suppose this is the owner and there are so many employees. These all are my employees who are working for me. And since these all are employees who are working for me, they are serving me, I will have to give them salary. What I will pay them? I will pay them the salary. Suppose the salary which I am paying to my employees is 20,000 rupees per month to each employee. So 20,000 rupees I am paying in cash, and for that 20,000, what am I receiving? I'm not receiving any product, but I'm receiving the services. So every transaction will involve some or the other give and take facility. Is that clear? Now this was example of I being the owner and these all are my employees. So to the employees, I am paying a salary of how much? 20,000 per month. So one thing I'm getting, that is the services. Another thing I'm paying is the cash. Okay, let's see another example. Now, suppose the other example is I am the owner of the business. Now, this is my business. Obviously, this place doesn't belong to me. That is, I am not the actual owner of this place. The owner of this place is the landlord from whom I have I have taken this property, this building where I have my office on rent. So what's happening here? In order to have this place, in order to have this office with me, I will have to pay a certain amount of rent to my landlord. Suppose the rent I am paying to my landlord is rupees 50,000 per month. Okay, so I am paying 50,000, that is, I am giving him 50,000 rupees in cash in order to avail that facility, in order to avail that business place. In order to have that business place, in order to have that office, I have to pay him the amount. So what am I getting? I am getting the services of using the place that a landlord has, for which I am paying him 50,000 rupees. So every transaction involves the give and take facility. Okay, let's see another example. Obviously, suppose I own a business, and since I own a business, I always have to purchase the products. I will go to the supplier's place, I will have to purchase the products, and for purchasing that product, I will have to pay in the cash. So this is also the give and take only, that I am. So suppose this, I am the owner of the business, and this one is the supplier. So what's actually happening? This is the supplier, and suppose I am the customer. In fact, I am the owner of the business, but as well as the customer as well, because I have to buy the raw materials, then I do the production work, then only I will have to sell that into the market. So for that supplier, I am the customer. I will process that goods into the finished products, then only I will be able to sell that to the market. Okay, now, so when I purchase, this person is giving me the goods. These are all the goods which I'm getting from him, and to have that products with me, I will have to pay him the cash. That is, I have to pay him the money. Okay, so every time, everything you do, just imagine now, you as a student, just imagine doing all the things. For example, you go to the grocery market, you go to the shop, when you buy anything, the pulses or the wheat flour, anything you buy, the fruits, vegetables, just imagine, obviously you give the money to them and you take the products you want. Apart from that, when you have to buy the books or the pens or pencil stationery, you will go to the shop, you will have to pay the amount, and you will get that the product to yourself. Is that clear? So every transaction involves two aspects. So one, we are getting it, one we are giving out. So the dual aspect. Now, two accounts involved in recording transactions. Now, two accounts are basically, I am getting the goods. The goods is one single thing. Goods is one part, the other part is the cash. So cash is going out, goods is coming in. Next, starting of a business. Again, now suppose, now let's see another example. Purchase of assets or goods. Now here we were purchasing the goods from the supplier, we just discussed. Apart from that, selling of the assets or the goods. If I talk about the supplier, he also is running the business, he's selling the product and he's getting the cash from the customers. Okay, this is also the part of transaction. Duality principle. Now just check, we can check the starting of a business. Suppose there is a person, there's an owner, he is the owner of the business, and this is his business. Obviously, he will have to pay some cash to the business in order to start the business. As we all have already seen, the business entity concept, which simply says the owner of the business and the business itself are two different persons. This person has to give, that is, this is a natural person who has to give an amount to start a business, which is known as capital. And on the other hand, the business is getting two things. One, it is getting the cash. Other thing, it is getting the capital. Exactly. Now, so cash is coming in, capital being a liability is also coming in. Okay, so capital is a liability which have to be paid afterwards, and cash is an asset which will remain in the business. So again, two things were involved. Now, next is the double entry system of accounting. This is only the name of the double entry system of accounting, that simply says that in order to do the transactions, there will be a double entry. One thing is coming in, one thing is going out. Next, accounting equation. This also gives the accounting information. That is, all the assets are basically equal to liabilities and capital. Now, what's this? Let me just explain you. For example, now, since there was an owner who has started a business. Now, the owner has paid to the business a capital of rupees 5 lakhs. The business will have two things with it. That is, first, there will be a cash of 5 lakhs. Another thing, it will have a liability with the name capital of 5 lakhs. This we have already discussed. Now, the thing is, you can see that these both are equal. For example, if I were to purchase a machinery, suppose I have purchased a machinery for rupees 2 lakhs. Now, what will be the scenario? Just see clearly and just see everything. Now, suppose I have purchased a machinery. Obviously, machinery is my asset. So, what I'm doing is I'm placing all the liabilities this side, and all the assets to this side. To make it clear, okay, suppose I purchased a machinery for say rupees 2 lakhs. Now, if I am purchasing a machinery for rupees 2 lakhs, now can you please tell me exactly what would have happened? Obviously, my cash would have gone in order to purchase that machinery. So my cash would have reduced to rupees 3 lakhs exactly. Obviously, just see, if I want to purchase a machinery, I will have to pay the cash. So what is the amount of cash which I am paying? It is 2 lakhs. So what is the remaining cash that will be remaining with me in the business? That will be only 3 lakhs. And I will have a machinery of 2 lakhs. Now just see, I have assets worth of 3 lakhs cash and 2 lakhs machinery. In total, I have an asset of how much? 5 lakhs, and a liability with the name capital of again 5 lakhs. So this is how this accounting equation is satisfied, that all the assets will be equal to the liabilities and the capital. Okay, let's take another example. Suppose what I'm doing now, I am purchasing furniture for rupees 1 lakh. Again, I will have to give out the cash, suppose 1 lakh. So in order to have that furniture, I will have to give out cash of 1 lakh. So what is the remaining amount that I'll be having in cash? 2 lakhs, exactly correct. And I will also have another asset with the name furniture with me. So I will have a furniture of 1 lakh. So in total, again, I have 5 lakhs worth of assets with me, and capital, again, liability worth of 5 lakhs again with me. So again, these both are equal. So I have 2 lakhs in cash, 2 lakhs machinery, 1 lakh furniture, 5 lakhs in assets, and 5 lakhs in capital. Let's check another example as well. Suppose now I am purchasing a building. Now I am purchasing a building. Suppose I am purchasing a building for rupees 5 lakhs. Now the question arises, from where will I get 5 lakhs? Because in cash, I only have 2 lakhs. So what I'm doing is I am taking a loan from the bank in order to purchase that building. So what I will do, I will go to the bank, I will ask for some money from that bank for rupees 5 lakhs. So now bank will give me 5 lakhs in cash. Now what will happen? My cash will become 7 lakhs. Earlier, I had cash of rupees how much? 2 lakhs. What did I do? I went to the bank, I borrowed 5 lakhs. So they gave me 5 lakhs in cash. Apart from that, I have also, there is also a liability which has made. That is, apart from the capital, I have made a liability of bank loan of 5 lakhs. I will have to pay back this 5 lakhs after a period of time back to the bank. So in order to take the loan, in order to have that money from that bank, I will have to borrow that amount, which is my liability, because after some period of time, I will have to return that 5 lakhs back to the bank. So now again, I have 7 lakhs in cash, 8, 9, that is 2 lakhs in machinery, 1 lakh in furniture, 7 plus 2, 9 plus 1, 10 lakhs. I have got 10 lakhs as my assets and 10 lakhs again as my liability, which simply has two of the items in my liability. One is the capital, which is the internal liability. which a business owes to the owner. And again, the another liability, that is the external liability which a business owes to the outsider. So again, my balance sheet, that is the accounting equation, is getting matched, that I have 10 lakhs worth of assets and 10 lakhs worth of liabilities. Now I had taken this loan in order to purchase the building. Now let's purchase the building. Now, if I purchase the building, I will have to spend the cash. So I had a cash of how much? 7 lakhs. Now, if I have to purchase a building for rupees 5 lakhs, the cash which will remain with me will only be 2 lakhs, and another asset with the name building will appear with rupees 5 lakhs. So again, my total will be equal. Let's check it out. I have 2 lakhs worth of cash, 2 lakhs of machinery, that is 4 lakhs, 1 lakh of furniture, that is 5 lakhs, 5 plus 5, 10 lakhs. I have 10 lakhs worth of assets with me and same amount of liabilities with me. Now the question arises, if each and everything is same, so why are we doing the business? That simply means for each and every asset, we have the equal liabilities. That simply means if I have cash, machinery, furniture, building, I owe the same amount to the others as well. So what's the need? What is mine then? Now the question is, there's a simple solution that asks, there's a simple meaning to it. In a business, the business has a liability of 5 lakhs towards the owner. This is his own amount. He has purchased a building for rupees 5 lakhs, for which he had taken a loan, but to the business 5 lakhs is his own, that is which is payable to the owner, and 5 lakhs is the liability to be paid to the outside. Is that clear? This is the simple reason behind the assets are always equal to liabilities, because the liability consists of two items. Liability has two items. Liabilities are of two types, that is, one is the internal liability, other is the external liability. Internal liability simply is the amount which a business owes to the owner, and the external liability is the amount which a business owes to the outsiders. Is that clear? So this was the explanation for the dual aspect concept, which also says that all the assets are equal to all the liabilities and the capital. I hope you must have understood each and every concept. We'll meet in the next class with the next concept. Thank you so much.